Have you ever thought about buying a house with a loan? Did it seem like an impossible dream? It's almost like wanting to dance, but you don't know how to take the first steps. Anyone can dance. All you need to do is learn a few moves and suddenly you're dancing around the floor before you know it. I'm going to tell you the steps you will need to take when purchasing a home with a loan. Let's get started. Hello, my name is Herbert McGurk. I'm a real estate agent for Social Impact in Beverly Hills, California. Thank you for watching my video, and please subscribe, comment, or like. I help people find their home, whether it's their first home or they're selling a home and looking for another home to upgrade. I'm not a loan officer, rather a real estate agent that works with clients who want to purchase a home with a loan. I'm also a ballroom dancer and know a little bit about getting around the dance floor. When purchasing a home, it's better you get all your ducks in a row before you start making offers on properties. Here are a few of the things you want to consider. Number one, your earnest money. Your earnest money is used for your good faith deposit, and it's usually 3% of the purchase price when making an offer and will count as part of your down payment. How much earnest money do you have and how much do you need? It's best you check with your lender to see what you qualify for. 2. Fees. There are several fees and expenses when purchasing a property. There are escrow fees, insurance, taxes, inspections, and appraisals. Although not a fee, you should have several months of mortgage payment. It's advised that you take these into consideration when purchasing a property. 3. Credit report. As you know, whenever you get a credit card, a credit report is run. There are a variety of loans that will address your credit requirement. I suggest you focus on keeping your credit score as high as possible. You never know what your credit requirements will be until you speak with a lender. Number 4, lender. Contact a lender of your choice. They will be able to qualify you for a loan and tell you what you'll need to do to qualify for a particular loan. Every lender may have a different process or requirements for your loan. Here are a few things your lender may consider. Income. A lender will need to verify your income. Lenders may verify, but they usually want to see at least 2 months of income statements or at least 2 years of tax returns. Assets. A lender will want to know of any assets you have, such as cars, boats, or any valuable assets. And depending on your credit obligations, they may want to make sure your income has room for a mortgage. Credit. A lender will run a credit report to see what type of loan you qualify for. After the lender has completed their preliminary analysis of your documents, they will tell you what you can afford to buy. You may be pleasantly surprised, or you may be what you expected. At least you will be able to adjust your prospects on whatever the outcome and give you an idea of your purchasing power. Okay, what's next? Start looking for the types of homes and locations that fit your needs and budget. If you haven't already contacted a realtor, it's a good time to get acquainted with one to help you navigate you through the purchasing process. Fast forward. You've found a house of your dreams. You've made an offer and it was accepted. Congratulations. Now, let's go through the purchasing process with a loan. The executed purchase agreement is sent to escrow and both parties, buyer and seller, get a copy of the contract. The escrow company is your independent third party that will carry out the instructions in the purchase agreement. First, the lender. You will need to send the purchase agreement to your lender for review. Your lender may want to make sure your information hasn't changed, depending on your circumstances. Most lenders will require that you update your credit report, that your assets are still the same, and your income hasn't changed. Second, the inspection. Generally, you will need to order an inspection immediately after the purchase agreement because the clock is now ticking. If you waive your inspection, you are telling the seller, regardless of the condition of the property, you accept it as is, which is not always a great idea. Tell your agent to make sure which contingencies you have removed, since you may have several moving parts to an inspection. The lender isn't using your inspection report to qualify your loan. The inspection is information you want to know about the property. Third, the appraisal. the lender will need to order an appraisal since the property is being used as leverage for your mortgage. Fourth, the underwriting. The underwriting team is a third party that works for the mortgage company that verifies what you say you have and aligns with the guidelines of the investor or agency put into place. Agencies could be Fannie Mae, Freddie Mac, VHA, FHA, USDA, or non-conforming or jumbo loans, which are over the conforming limit in the county and may have a specific investor. Underwriting will assess if there are any challenges with your applications. If they are, then the underwriter, the loan partner, will request additional information to remove any of the challenges with the loan. After everything is resolved, you will be able to have a conditional approval. Fifth, finalizing your loan. Your inspection contingency is removed. Your appraisal came back at or above asking. All your conditions of your loan have been resolved for final approval. Your insurance and third-party documents are vetted and verified and included in the file. Now that you have everything in place, you can remove your loan contingency. You will need to schedule the signing of your loan documents. The escrow company will go over the taxes and fees and make sure all the numbers line up. On the day of signing, a notary will come over and explain everything and see that everything is signed. 90% of the documents are boilerplate language, which the government requires for each specific loan program. Now you need to have your remaining cash for the down payment sent to escrow, as well as the closing costs that you owe. And now you can sign your document. Congratulations, you are now the proud owner of a house. I hope you've enjoyed my video. My name is Herbert McGurk, real estate agent for social impact. I give 10% of my commission to a charity of your choice in your name every time we complete a transaction. Thank you for watching my video. Please subscribe, comment, or like, and I'll see you on my next video.